Hi everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of business. And today we're diving into McKinley Acquisition Corporation's latest report, which oddly enough tells us less about what they've done and more about what they've gotten done. So McKinley Acquisition Corporation, or McKinley as we'll call them, just filed a report about their big event, their IPO, which is like the first time a company sells its stock to the public. Think of it as their grand entrance onto the stock market stage after a lot of behind the scenes preparation. The company itself is what's called a special purpose acquisition company, or SPAC. It's basically a shell company created with the sole purpose of raising money through an IPO to eventually acquire or merge with an existing private company. They don't have their own products or services to sell. Their whole business is about finding another business to buy. This particular report focuses on the aftermath of their initial public offering or IPO. They've told us they sold a whole bunch of units, and each unit is like a package deal containing a piece of ownership in the company called a Class A ordinary share and also a right. This right is pretty interesting. It gives you the option to get a small fraction of another share later on. It's like a bonus coupon for future shares. McKinley managed to sell a massive 15 million of these units, and they priced each unit at $10. That means they brought in a cool $150 million before any costs. That's a lot of money for a company that, remember, doesn't actually do anything yet other than prepare to buy something. But wait, there's more. On top of the public sale, they also sold an additional 465,000 units in a private deal. These were sold at the same $10 price point, bringing in another $4.65 million. These were mostly for the smart money, the investors who got in early or have a closer relationship, and these private units come with some strings attached, like trading restrictions, meaning they can't just sell them off immediately. So all in all, from both the public sale and the private placement, McKinley raked in about $154.65 million. Now, a big chunk of this money, $150 million to be precise, has been put into a special trust account. This trust account is like a locked vault, holding the money for the benefit of the people who bought the shares, the so-called public shareholders. This is standard practice for SPACs. The money stays safe and sound in this trust until the company finds a target to merge with or acquire. If they don't find a deal within a certain time frame, which is usually around 2 years, the money is supposed to be returned to the shareholders. This report also includes a special financial snapshot, an audited balance sheet, which is a financial picture of the company at a specific point in time, August 13th, 2025. It shows us exactly where the money is and what the company's financial standing is, right after it received all these IPO proceeds. You can think of this balance sheet as the company's financial report card for its very first public day. Now, looking at the specifics of what they're trading on the stock market, McKinley's Class A, ordinary shares trade under the symbol MKLI. Their rights, those little bonus coupons we talked about, trade as MKLIR, and the combined units that include both shares and rights trade as MKLIR, and the combined units that include both shares and rights trade as MKLIU. All of these are listed on the Nasdaq Stock Market LLC, a major stock exchange, which is where most tech and growth companies list their shares. The company is also identifying itself as an emerging growth company. This is a status given to newer companies, and it allows them to use some relaxed reporting rules for a period of time. McKinley has chosen not to take advantage of some extended transition periods for new accounting standards, which means they're opting to follow the latest accounting rules sooner rather than later. So what's the big story here? It's all about the money raised and the company's current state as it prepares for its main mission, finding a business to acquire. They've successfully completed their IPO, bringing in a significant amount of capital that's now being held in trust. The next big move, the crucial step for McKinley, will be announcing their target company and moving forward with the acquisition or merger. That's when the real work and the real impact of this SPAC will become clear. Now, let's get into my take on this. McKinley Acquisition Corporation has done exactly what it set out to do, raise capital through an IPO as a SPAC. They've brought in a good amount of money, $150 million, which is a solid foundation for their acquisition strategy. The fact that the majority of the funds are in a trust account is a positive sign, showing responsible management of public investor money. They've got the cash ready to deploy. The key risk for any SPAC, including McKinley, is the ability to find a suitable target company and complete a merger or acquisition before their deadline. If they don't, investors could get their money back, but the company itself might cease to exist in its current form. The success of McKinley will entirely depend on the management team's ability to identify a promising company and negotiate a favorable deal. The structure of their securities with shares and rights bundled into units is pretty standard for SPACs. The rights offer a potential upside for investors, but also add a layer of complexity. The market's reaction to their announced acquisition, whenever that happens, will be the true test of McKinley's strategy and execution. For now, they've cleared the first hurdle, which is a big one, but the race is far from over. Their future success hinges on making a smart acquisition. Whenever that happens will be the true test of McKinley's strategy and execution. For now, they've cleared the first hurdle, which is a big one, but the race is far from over. Their future success hinges on making a smart acquisition. Alright, that's our breakdown of McKinley Acquisition Corporation's latest filing. What's your take on SPACs in general and McKinley's prospects? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community, linked in the description for more discussions on these topics. Thanks for watching, and we'll see you next time on Corporate Decoder.